Zach Bassett here with COS Accounting and Tax, doing videos for my Compounding Interest podcast and the videos that accompany it. Hope that you guys are liking the ones that I've got coming out so far. We'll have more and more coming out every couple of weeks. I'm hoping that I can continue to come up with really good content, and I think that I will. There's always new stuff to be found, and it's also given me a whole new reason to kind of dig deeper and find even more. I want to keep you guys interested and continue to find all the ways possible to save you guys money. A big thing is, we've talked about already with LLC versus SCorp is entity structuring. You need to make sure that you're structured correctly so that you're getting the tax savings. And a lot of the time, people will think what is right is it's intuitive to do something a certain way. And really they need to do it a different way. So like in the case of, say you and your friend want to start a pest control company, you're going to want to make sure, first thing, that you've got a partnership, right? Because there's two of you. You're going to have to partner together on it. Well, sometimes people just stop there. So first things first, if it's you and a buddy starting a company and it's going to be 50-50, or there's 3 or 4 of you, let's say there's 3 of you doing it, and it's you're doing a pest control company. So first thing you want to do is set up a LLC. And an LLC with multiple members is automatically a partnership. So LLC, multi-member, equals a partnership for tax purposes. So all the different entities, there's the LLC, but it's a disregarded entity, so it doesn't get taxed. Remember that. But then if there's 2 of you, it becomes a partnership and it does get taxed. So you've got the LLC, you've got the partnership, you can elect SCorp status like we mostly do. You can also be a C corporation. This is the one you're going to want to do if you want a lot of investors. So hundreds of owners. And then a partnership's going to be, if you've got anywhere from 2 to however many, but let's say 2 to 10 owners. And then you want to do an LLC for all rentals, all rental properties. And then an S corporation is what you're going to want to use for your single member income. So we'll put single member. If it's a husband and wife, same thing. You would do it through an S corporation. To make it easy on us, I would most likely have you just set up your LLC S corporation as one of you, not you and your wife listed on there, unless you were looking at doing some more complex solo 401k type of things, which I definitely recommend at some point. But to get started, you really can just do a single member S corporation with one of you on it. If only one of you is doing sales, you probably put the person that's actually doing the sales on as the main owner. But let's say you're doing a multi-person LLC or a multi-person business, and you are doing it with friends, not your spouse. Then what you're going to want to do is the LLC with multiple members, and it's automatically a partnership. So you're going to do your articles. You're going to do your articles of organization. You're also going to do your ownership agreement. So I'll put organization. I'm guessing I spelled that wrong. Well, articles of organization, and then you've got your ownership agreement. A lot of people try and skip past this ownership agreement, and that is a huge mistake. Take it from me, someone that has had major issues in business because of not having the right ownership agreements and being basically cut out of a company that I, basically built. That can happen. And, you got to take your lumps. But if I was smart and I had these things set up in the right way, I would know exactly what can happen to me and how. So in the ownership agreement, you might put in there what happens if, say it's me and my best friend, and what happens if he dies? Like, what would happen? You without an ownership agreement, it goes into probate, and you would have major issues getting the business just to run normally. What if their position is priceless, and then you still have to pay out their spouse for half the business, plus you've got to find a way to replace someone that's priceless? At that point, you might as well just go bankrupt and start over, because it's going to be a lot of money to hire all the people that would cover what that guy did, and you might not even know all what he did. So you really, so many different things to think about. But what happens if they died? What happens if they want to sell? What happens if you get new partners and then they want to push somebody out? I mean, there's hundreds of different things you can put into the agreement, and with the right lawyer, they're going to know exactly what to put in there for you. They're going to ask you some questions, of course, but they're going to know. Now, COS accounting and tax, we don't do multi-member LLC setups. We don't, if it's 3 or more, we don't do them. If it's a 2-member and it's 50-50, we can do that setup. If it's a husband and wife SCorp, we can do that setup. We also do the LLCs for rentals, and we do the 2-person partnerships. And we can do SCorps, but they're so rare. I think we've only done a couple since I started in business. So yeah, just multiple member, 3 or more, you're going to have to find a lawyer. You might spend anywhere from $800 to $3,000 or more doing these ownership agreements and the initial setup. People think that's just crazy and I can't do that. I'd rather just do it myself online, and end up completely, for lack of a better word, screwing themselves over going forward. Don't do that. Get a lawyer. We have one that works, that specializes in door-to-door. So he's not with COS accounting, but it does door-to-door stuff, so I recommend him out. His name is Cody Backus. And look at the link below, the info below, and we'll get you his number. He's awesome. He can do anything that you need. If you want someone to just take a look at your door-to-door agreement for the summer, then send it over to him. He'll look at it. I don't know his price per page, something $50 or $100 a page to look it over, and then he can do LLC setups, anything, the ownership agreements, and he's awesome. I've worked with so many different lawyers doing these ownership agreements. He was the only one that, once I saw the way he did it, I knew he was the only one that actually knew what they were doing in depth. The other people were doing exactly what you would do if you found a template online and just erased the old names and put in the new names. This guy goes in depth for what you actually need, and his pricing is awesome compared to what that should cost you on average around here. So yeah, definitely give Cody a call if you need help setting up your own partnership. But there's a big thing. People set this up and they think they're done. They're like, okay, we have our partnership and it's 50-50. So we're good. Now we can just do the taxes for that and we'll be fine. Well, you got to think more in depth than that. You're going to have certain expenses that will apply to one partner but not the other. Like, say my mileage, I might drive 20,000 miles this year because I live in Ogden, Utah, and then I work here in Provo. That's over an hour, 1 to 2 hour commute, depending on traffic. But I might have 20,000 miles where my partner Mason might have 5,000 miles. If we put that into the partnership return as 25,000 miles, now he's getting an unfair break on his taxes because of my expense. I'm not getting that full break. So I want to have my own entity underneath this partnership so I can make sure not to miss any of those. Not to mention that it's a lot easier to save on self-employment tax through the S corporation than it is through the partnership. It's also easier to make sure you get the full QBI deduction, because on guaranteed payments from a partnership, you're gonna affect your QBI and cost yourself the 20%. If you've seen the videos where I talk about QBI, it's 20% of your profit that's not taxable for federal. That's a huge amount. That's $4,000 or $5,000 in savings that you really don't want to miss out. That's if you're at $100,000 in profit. You're going to save $4,000 or $5,000 just by having the QBI deduction. So don't miss that one. Honestly, it's awesome. So you set up as 2 S corporations underneath. So now the partnership income is going to flow through 50-50 to the S corporations. Down here, you're going to have your mileage deductions. You're going to have, he's going to have his mileage. You're both going to have your cell phones. Things that you spent that aren't directly correlated to the business. Whereas, buying this equipment, the computers and cameras and whatever else it might be, that's all going to go up here since we both split the cost by using our revenues to pay for this. So in the S Corp, it's going to be just like the other videos I've talked about S corporations. You're going to take all your expenses that are related specifically to your side of the business. And then at that point, you're going to pay yourself a wage. On each of you are going to pay yourself a wage. And then you're going to have your income flow through to your personal 1040 taxes. And it flows through on a K1. So you'd actually get a K1 from the partnership to the S Corp, and then from the S Corp to your 1040. So you don't want to make a mistake here. This partnership needs to be owned by your S corporations, not by you personally. So that's a huge mistake that gets made. You'd basically be defeating the purpose of having the S corporation if you have the partnership owned by you down here. Now you've just caused the same bad outcome to happen pretty much without getting the break on the SE taxes. So make sure the partnership is owned by the S corporations, which the S Corp is owned by each of you personally. I can't really draw well or write, but yeah, so this would be this is your door-to-door perfect structure. A lot of people get this wrong. If you're in door-to-door, you're going to start your own pest control company or alarm or whatever company. If you're in direct sales of any kind, this is the structure you want to do if you have more than one partner. You can set it up with many different partners. If you have multiple branches, you can have this partnership own 3 separate partnerships, which would be owned by the S Corps of each owner. Maybe these each have 3 different owners. So each one of those would have 3 coming off it with S Corps underneath. So it's pretty easy. You're just kind of doing the same thing, but at a grander scale with each of your branches. So don't let it confuse you. Just partnership that's at the very top is going to own pieces of each branch underneath. Each of the owners of each branch, it's going to have an S Corp underneath that. So it's not quite as difficult. I might be making it sound like it is, but it shouldn't be too difficult. But yeah, this is going to be your structure anytime there's more than 2 people. If there's 2 or more people that are not married. If there is just the one, just do the S corporation, single member LLC S corporation. So basically, if you want an LLC, you can get it done through this app. Just find the LLC video and fill out what you need. It's going to ask you a bunch of questions, make sure we get the right entity for you, and we can get it set up for you, in 10 business days or less. Pricing's going to be all in that LLC video, so check it out. But yeah, I think this is a pretty good breakdown. If anyone has questions on their specific entity, if you want to go to the Q&A spot in the app and submit your question, I'd love to do a video on that to make sure we're kind of hitting all the different kind of structures of clients in door-to-door especially, but any type of business, I'd love to do a video on that, kind of explain it a little more in depth. Yeah, thanks a lot. I appreciate it.